the recording and do the lecture, the chapters. Activity-based costing. That's what I'm going to talk about today. The activity-based costing. So, what we learned so far. You as a manager, not as a student. Stop seeing yourself as a student. You as a manager, you have to know a lot of things. First, you have to know what's your goal, because without a goal, you're like a drifter, going somewhere, but you don't know where you're going. That's why I told you the very first chapter. Please make sure you know what you want. What's your goal? Then your life will be way more organized and way more easy. That's first thing. Second, as a manager, obviously you have, in order to make a decision, you have to understand what you have to understand. You have to understand costs. This course is mostly on the cost side. Why the costs? Because the cost is it's one part of the profit. I mean, not profit of the income. Yeah, profits as well. So because you're always going to have a revenue, and then you have the costs. So you as a manager and you in personal life, at some point you realize that you don't have much interference or influence on the income that you're going to make, because the employer is always going to give you what they want to give you. They're never going to give you what you want them to give you. That's obvious. And then what's left for you? The costs. That's the only game that you have, costs. So if you want to save more, you have to spend less. But how can you spend less if you don't understand the costs? That's why for the different reasons, we see there's a different cost classifications. One based on the object, we have direct cost and indirect cost. Based on the way on the financial statements they appear, we have a product cost and period cost. On the product cost, we have direct product cost are direct material, direct labor, manufacturing overhead. That's how we make a product. Then how the costs behave, we saw that we have a variable cost and fixed cost. Based on how we make decisions, we're going to see later in the chapter 12 on the decision making. You have a differential cost, you have opportunity cost, and you have a historical sunk cost, the costs which are relevant for the decisions. So for different purposes, you have to use the different costs. Now the question is how fast you can work with these classifications. For what purpose you're making the report, and what purpose you're thinking. So you have to use the different classification in order you to get the best results. And obviously for one decision on the same cost, you're going to go with one classification. For the another decision, you can go with a completely different classification. But in order you to do that, you have to be comfortable with the different classifications. That's how you're going to make fast decisions. And sometimes the fast decisions, the one that determine are you going to I'm going to say win or lose, but winning and losing, that's a relative term. Nobody actually losing, nobody actually winning. It's just a matter of perspective. But let's say you can generate more cash when you're thinking faster, and at the same time, and if you think fast one moment, and then you generate cash, and then you get excited and you start thinking slow, and you can lose that cash in the next decision. That's another thing that can happen. So you cannot lose your focus. You cannot lose your concentration. You cannot get excited. You don't have time to get excited, because once you get excited, that puts you on the bad spot, and you can make right away the wrong decision. And whatever you're excited about is gone. And you can trust me on this. So you have to be super, how can I say, you have to be like people from the Eastern philosophy. They don't get them wrong. They do have feelings, but they don't get excited. They don't get emotional. They're going to get super happy and super sad. I cannot do that. And when I'm sad, I'm sad. When I'm happy, I'm happy. So that's another thing for me to learn. But you, because you're young, you can use those things. So what else we learn? we learned that we have a cost volume profit analysis. Why do we need the cost volume profit analysis? Well, obviously, for everything that you leave, you have to understand, since you get out of your parents, suddenly you realize, well, now nobody's bringing, but I still want to spend. Well, if I want to spend, now I have to earn, because obviously nothing's coming like the money. They don't grow on the trees. So you have to put efforts in order to generate something. Either to do sales, either you're gonna sell yourself, whatever you decide to do. But that's why we need the cost volume profit analysis, so you can understand at which point you're not losing money, but you're not making money. So where is your break even? And as you see on the break even, you have to split the cost on the way how costs behave on the variable and fixed cost. And once you do that classification of the variable and fixed cost, then you can realize that, hoops, I have here contribution margin. And contribution margin is the sales minus the variable cost. And then the contribution margin has to be high enough in order to cover the fixed cost. So at that point, you're coming to the point of the questions, how many units I need to sell, or how much should be my total sales. And the units that you need to sell will be fixed cost divided by contribution margin per unit. And the sales that you need to generate in order to be on break even will be the fixed cost divided by the contribution margin ratio. And after that, you have a variation if you want to get the target profit, or if you want to see where is your margin of safety. That's for the cost volume profit analysis. And then we're going to the job costing. On the process costing, I already told you. The costing system in the companies, why do we need the cost system? Well, obviously, we need to know how much costs us to produce something. Because if you don't know how much costs you to produce something, how can you sell it? Or how can you sell it with profit? I mean, you obviously can sell it. But if something costs you to make it $100 and you sell it for 50, probably you're not gonna be in business unless you just won Lotto Max with $50 million. But even in that direction, you're not gonna stay alone for the business. So you need that cost. So you have two types of costing system. One is the process costing, the other one is the job costing. The process costing, I told you, what I need you to know about the process costing is the cost of the product will be the total cost for the period divided by the number of the products that you produce in that period. You're getting average cost, that's it, done. On the job costing is more interesting. Why? Because on the job costing, you have to trace all the three elements of the product cost, which are direct material, direct labor, manufacturing overhead. And we saw that direct material, direct labor, that's easy to trace. We can easily get those costs because those are direct costs. The problem comes with the other cost, with the manufacturing overhead, for example, or the non-manufacturing cost, the one that are directly expense. On the manufacturing overhead, so we saw that we have to apply that manufacturing overhead once we produce the product. How we're going to apply it? We come up with the formula that we're going to use the estimation for the total cost. First, we have to find the allocation base, or something that drives the cost. And then we come up with the total cost for the overhead for the entire period. And that will be our nominator. Then we're going to come up with the estimation of the cost driver or cost allocation base for the same period, usually 1 year. And that will be your denominator. Denominator, you're going to have a predetermined manufacturing overhead cost, predetermined manufacturing overhead rate. And then we're going to apply that rate based on the actual usage of the cost driver. And as you saw, you have two scenarios, either over-apply, under-apply. But the thing is, you understand that that will be our traditional costing system for the job costing. And you understand at this point that traditional costing system is not perfect. Well, the people in the industry also realize that. Why? Because there's so many costs which are related to the product, but because of the simplicity of the system, you're not catching those costs. So what should we do? So they come up with the activity-based costing. And activity-based costing is designed to provide the managers with the cost information for strategic or other decisions that potentially affect capacity and therefore affect the fixed as well as the variable cost. So we're going with the capacity here. And you have to understand, activity-based costing is a good supplement to the traditional costing system. So we're going to run the traditional costing system and we're going to run activity-based costing at the same time. What's the difference? The difference, activity-based costing from the traditional. Now, traditional assigned to the product only and only manufacturing cost, where activity-based cost can take some of the non-manufacturing cost and also allocate it to the product. So it gives us a more explicit inclusion of the costs in the product. So we have more efficient costing on the product, or more meaningful costing on the product, if you want to put it this way. So our products are more realistically costed. Because at the end of the day, you have to understand whatever you're producing, there, in order you to run your company, there either you have to get the clients to pay for the cost, either you have to pay from the cost. One way or another. There's no other way. Somebody has to pay. There's no free lunch. If you think that the free pizza with the president is free, it's not free. Sorry. Why? Because they already estimated that cost and they put it in the cost, in the overhead cost, which overhead costs are included in the price of the course that you're paying. Now you're learning managerial accounting. You should be smart on this. You have to understand. Every time I tell you there's a free lunch, it's not free. Sorry. This is a real life. In real life, there's nothing is free. When you go to superstore, they give you that's free for you. It's not free. It's already in the price of the other products through the manufacturing overhead. So for the simplicity, you can have a plant-wide overhead rate, which will be for the entire company. Means the entire total overhead cost for the company will be calculated. We're going to choose the allocation base, and we're going to allocate it for the entire company, and we're going to come up with the overhead rate for the entire company. But probably that rate will be not very applicable for different departments which may or may not use that allocation base. And since one of the departments using different allocators, different things drive the costs, we cannot apply enough manufacturing overhead for that department. That department, it looks like too profitable, which in fact may not be. So that's why we're going to come up with, to be more accurate, we're going to come up with the departmental overhead rate, which will include only the cost for that department and allocation base and cost driver for that department. And then we come up with the predetermined manufacturing overhead for that department only. And the last, more sufficient and complex, will be the activity-based costing. How the activity-based costing is going to work? Well, each activity-based costing has, now we're going to assign activity-based costing pools. And each pool we're going to have own unique measure of activity. Now, where in the traditional system usually relies on the volume measures. Now, traditional also, we have the predetermined overhead based on the budget activities. So we're budgeting something, come up with the predetermined manufacturing overhead, then we start to apply the manufacturing overhead when we're actually using the actual usage of activity. But we also including the unused or idle capacity as well. So it's not based on the capacity, it's based on the cost. Where in activity-based costing, products are charged only for the cost that they're using. not for the cost that the capacity is not used. So for that purpose, the idle capacity is not charged. It's left as a common cost for the company. How are we going to do this? For the activity-based costing, we're going to come up with the activity first. Activity will be event that causing the consumption of the overhead resources. Second, we're going to assign the activity cost pool, the cost bucket in which the costs related to the particular activity measure are accumulated. And then we come up with the activity measures. Activity measures will be allocation-based in the activity-based costing system, also called cost driver. Two common traditional types of the drivers we have, that will be transaction driver and duration driver. Before we go into transaction duration, I want to give you a simple example. Simple example is going to come from your monthly electricity bill. Do you pay for electricity? Or electricity is already included in your rent? Is there anyone who pays for the electricity? Anyone?
Can you repeat it?
Is there anyone who pays for the electricity? Anyone who pays bill to BC Hydro?
Yes.
Yes?
Yes.
Okay.
Yeah.
Sadly, yes. Okay, good. So listen to this question for you. If you pay when you see the bill from BC Hydro, do you see how many hours you use your stove, how many hours you use the fridge, how many hours you use for charging the phone, how many hours you use for do you see that information?
No.
But if you see that information, is that going to be useful for you?
Yes, I think so. They have like graphics in the, if you can.
They have a graphics based on the usage, usage on kilowatt.
Yeah,
but they don't.
Like,
they don't ask you. Yeah, but they don't tell you for what activity you use that electricity.
Exactly.
Do they?
Mm-hmm.
But
no,
if you have that information, is that going to be useful for you?
For sure, yeah, that will help.
For you, sure. So that's what you're doing in activity cost. So that's what we're doing here. So what we're doing, we're getting the electricity bill. So let's say our electricity bill is $100, right? So then we come up with the activity. What's the event that happened in our household that cause consumption of the electricity? And we can come up easily with TV, watching TV first. Second will be lights. Third will be oven or stove. Fourth can be charging the computers, telephones, cell phones, anything. And let's leave it there. So we come up with the 4 activities. Now, the next thing we have to get the activity cost pool. The cost pool is going to come with the total bill is $100, correct? That's 100%. So now we're thinking, how much? Now we can go with the different kind of measures here. We can come up with the time duration in terms of we can calculate what's the time the TV is on. Is it like a 1 hour or 2 hours per day? And once we know the bill is for 60 days, 2 hours, let's say 2 hours per day the TV is on, we can come up with 120 hours is the usage of the TV, right? Then we can come up with the same thing of using the oven. We're using the oven 2 hours or 3 hours per day, times 60 days, 180 hours. And the other 2 activities. So once we have the number of hours, the total number of hours will be 100%. And then we're going to get the percentage. What's the percentage for the watching TV? What's the percentage of using the stove? What's the percentage of using the electricity or the lights only in the household? And based on that percentage, we're going to allocate the $100. So now we have hours total hours that we're watching TV and cost associated with that hours, with that total hours. So now we can easily come up with the cost per hour for watching TV. And now you know. So every hour that you're watching TV is going to cost you another $2, let's say. Or every hours that you're charging your phone, it's going to cost you $1. So next time, instead of charging your phone at home, you're going to charge it in your friend's house. He to pay for $1. Why do you have to pay for $1? Right? That's how you can control the cost, by understanding the cost, from where the cost coming, what drives the cost. So that's why you need the activity-based costing. That's why the manager's cost. So you can imagine on the $100 you can make saving $1. If you're working with the multi-billion-dollar company, what will be 1% saving? 1% saving, it might be $1 million. Is it worth it? Absolutely. So again, two common types of activities that you have. Transaction driver, so how many times you're using this? Or duration driver, how many minutes or how many hours or how many kilometers I'm using this? That's the transaction versus duration hours, duration transaction. So then you have to, activity-based costing defines 5 levels of activity that largely do not relate to the volume of the units produced. In traditional system, usually we rely on the volume measures, such as direct labor or machine hours, to allocate the overhead. So the 5 will be unit level of activity, batch level of activity, customer level of activity, organization sustaining activity, product level of activity. So you can see 1, 2, 5, but those are not related to each other. So in traditional absorption costing system, again, we calculating predetermined manufacturing overhead based on the estimation, based on the budget. That's what creates unstable results. Why? Because then we have to, at the end of the period, you always have to compare what is the actual versus the budget, because we are applying the overhead, remember, based on the budget calculations, not based on the actual. Where in the activity-based costing, products are charged only and only for the cost of the capacity they're using. The cost for the idle capacity, that's not charged to the product. And these results are more stable and produce stable unit cost, which is consistent with the objective of assigning only those costs to the product that are actually caused by the product. Example for you will be, listen this. You're living with a roommate in 1-bedroom apartment. Your monthly bill for the electricity is $100. 2 of you, right? 2 of you are in the apartment. So we decide to split the bill, which is fair, right? So one pays 50, the other pays $50. Is that fair?
Yes, Professor.
Huh?
Yes.
Yes. Okay. So far, okay. Imagine now the scenario. One person don't have a job. He's a student at Douglas College. He doesn't go anywhere. He spent all his day at home. He's using his computer. He's turning the lights on. He's watching TV. He's listening lecture. Where he listen, where he don't listen, that's another question. He's doing all the assignments, everything. He's using everything. The other person, he's working full-time every single day. When he comes to work, he just going straight to the bed and sleeps, and next day just leaving and go to bed, go to work. Saturday and Sunday, that person has second job. So he's not barely spending time at home. Or Saturday and Sunday, he's going to his girlfriend's place. He don't even live in the apartment. Now, is it fair now to split the electricity 50-50?
No, it's not.
No, it's not. So what the other person is going to ask? Let's split the bill based on the usage, not based on the 50-50, based on the usage. That's the difference between traditional and the activity-based costing. Traditional split the cost on the direction 50-50, where the activity-based costing split the cost based on the actual usage of the cost. Make sense?
Yes, Professor.
So which one is more fair?
Activity.
Activity, right?
50-50.
Do you see? Right. Okay. So how are we going to design activity-based costing system? First, we're going to come up with the activity. We're going to come up with the activity cost. Then we're going to have activity measure. Then we're going to have a cost object, activities, consumption of the resources, and we come up with the cost. Steps for implementing activity. First, we have to, again, identify and define the activities. Activity cost pool, activity measures. Then we have to assign overhead cost to activity cost pool.
Excuse me, Professor. I'm
Yeah.
really so sorry to disturb you, but can you please explain the meaning of activity cost pool? I didn't understand.
Activity cost pool. You're gonna
Yes.
hold on a second. You're gonna see application. Just a second. You're gonna see the application.
Okay.
Okay.
Thanks.
Next one is assign overhead cost to activity cost pools. Calculate the activity rates. Assign the overhead cost to cost object using the activity rates and activity measures, and prepare management report. So let's start one after another, and I'm going to tell you exactly which one is the cost pool for the activity. So first, we're going to start with the traditional income statement. Traditional because sales, we have then cost of goods sold, gross margin. Selling administrative expenses or net operating income, loss in this case. So as you can see, the costs are assigned to direct material, direct labor, manufacturing overhead. And then we have the non-manufacturing costs, which are the shipping, marketing, and general administrative expenses. This company is losing money, $1,250. Now, activity cost pools. First, we're going to come up with the activity. Activity, first, the classic brass, this company, the activity-based team, selected the following activity cost pools. First one is the customer order. Customer order is activity, and to that activity, we're going to assign the costs in the pool. Make sense now? Next activity is a product design. So we're going to get all the costs for the product design and put it in one pool. Then we're going to have order size. We're going to get the cost for the order size and going to put it in that pool. Then we're going to have a customer relationship. Customer relationship, that's the cost allocation. We're going to come up with the activity. We're going to come with the activity cost pool, which is the total cost for the customer relation. So activity cost pool means the total cost for that activity. That's how you can interpret that cost pool. Cost pool is the bucket in which you put the cost only related to that activity, nothing more. Then you're going to have activity measures. So how are we going to measure the activity for the customer order? We're going to measure it as a number of the customer unit. That will be number, that means transaction. Product design will be number of the product design. That will be transaction driver as well. Order size will be based on the machine hours. That's duration driver. Customer relation will be normal activity, active customers. That will be transaction driver again. And for the other costs, that's not applicable. So again, customer order. We're going to assign all the cost of the resources that are consumed by taking and processing customer orders. And we're going to call it activity customer order pool. When we get all the costs, that will be our cost pool. Make sense? Do you understand now what the cost pool is?
Sorry, no,
The
I
cost-
didn't.
Sorry?
The cost, the activity cost pool is the final cost, is correct?
For the activity,
The cost pool will be the total cost,
Total cost, okay.
all the costs related to the customer orders.
Okay.
Make sense?
excuse me, Professor.
Yes.
That's okay. I can understand the cost activity pool, but is that similar to the total cost or not?
Sorry, what? What kind of cost?
Activity cost pool is similar to total cost or it's different?
It's similar to total cost, but that will be the total cost for that activity only.
Oh, okay. Thank
The
you.
activity cost pool will be the cost for total cost for that particular activity only.
Okay, thank you.
And sorry,
So-
and the activities that we're going to focus are these ones, right?
Sorry?
Customer orders. So the activities that we're going to focus are customer orders, product designs, etc.
Yes. Yes.
Okay.
Those will be the activity that we go. For example, the activity could be you remember the electricity bill. Our activity can be lights. The cost pool for the lights will be $20 per month. The $20 out of $100 comes from the lights. Then we have to measure that activity. Since we have the cost pool for that activity, and the cost pool, we have total cost of $20, then we're going to measure the number of the hours that we're spending on the lights. And if we spend 100 hours, you can easily say, okay, now I have $20 divided by 100 hours. It costs me 20 cents per hour for my lights. So next time, when you turn on the lights on the washroom and leave the house for 4 hours, you know that 80 cents from your bill is going to come from the lights. Make sense?
Yes. Yes.
Okay, so those are the activities. The next will be product design, that we're going to assign all the costs of the resources consumed by the designing product. Order size will be assigned all the costs of resources consumed as a consequence of the number of the units produced. Customer relations will be assigned all the costs associated with the maintaining relationship with the customers. And for the other, we're going to assign all overhead costs which are not allocated or associated with any of the other cost pools. So what's going to happen in reality? Direct costs are the material and labor, and there might be other. Those who directly will go to the product. Then, from the manufacturing, non-manufacturing cost, the first stage was to get the activity cost pools. And next one is to allocation stage. On the allocation stage, so now, watch this now. On the production department, we come up with this different report. So we split the product department in the indirect factory wages, factory equipment depreciation, factory utilities, factory building leases. The total is 1 million. 1 million is exactly the manufacturing overhead. Then we're getting the general administrative department expenses, which are 510 here. So those one, we break them on the administrative wages, salaries, office equipment depreciation, administrative building lease. Marketing department, the total cost is 300. Total cost 300,000. And we split them on the marketing wage, salaries, and selling expenses. After that, direct material, direct labor, and shipping costs are excluded because those are direct costs. And those can be easily traced directly to the product. So we're not going to allocate direct material, direct labor, and shipping. So where are we going from here? We have our activities, correct?
Yes, Professor.
So now we start getting the activity cost pools. For the customer order, we're chasing indirect factory. How much of the indirect factory wage is related to the customer order, product design, order size, customer relationship, and other? The total should give you 100%. The total of those should be always 100%. So you have to allocate this cost based on the activities. And that's how you're creating the cost pools. So this will be the pool for the customer order. This will be the pool for the product design. This will be the pool for the order size. This will be the pool for the customer relationship. This will be the pool for the other. Make sense?
Yes, Professor.
So now, if I know that indirect factory wages, 25% goes to the customer order, and I already know that the indirect factory wages is 500,000, can I get the cost which is related to the customer orders and the indirect factory wage?
Yes.
Yes. And that's what I'm going to do in the next stage. I'm going to start calculating, converting those percentages into the numbers. So the first number we're going to come 500,000 times 25% is going to give you that number, which will be related to the customer orders for the indirect factory wage. And keep going. Then on the factory, you have 20% on the factory equipment. Factory equipment depreciation was total 300,000. So we're going to get only 20%, and we're going to allocate it to the customer orders. And we keep going until we get this table. And now on this table, you can see on the customer orders from the entire pool, the total costs are 320. For the product design from the entire pool of all the different costs, we have 252,000. Order size, entire pool 380. Customer relationship 367,500, and for the other 390,500. The total is 1,810. Why? Because this is the cost that we are allocating. We're not changing the cost. You have to understand. We're not changing the total cost. We're just allocating it differently. Find a different way to allocate. Make sense?
Yes, Professor.
Yes.
Same thing like here. I have, let's, for example, in this class, I have supposed to have 38 students. So now one classification can be based on your final scores. The next classification can be based on the gender. The third classification based on the color of the hair. But on all those classifications, my total always will be 38 students. Same thing here. The same costs, different allocation, come up with the same total. But now I have the cost for every single pool. I have the cost for the customer orders, for the product design, for the order size. So since I have the total cost, what's the next thing that I have to come up with? Usage of that activity. Now we have to calculate the activity. Now, activity-based team determined that the classic brass will have those total activities for each activity pool. For example, for the pool of the customer order, we're going to have 1,000 customer orders. For the new design, product design, we're going to have 400 new designs. Next one, 20,000 machine hours. Next one, 250 customer relationship activities. Now the team, once I have these numbers and the total number, which is the total number here, if I know that my total customer order is 320 and I have 1,000 orders, can I come up with the cost for one order?
Yes, Professor.
Yes, right? And that's what I'm doing now. Now I come up with the cost for one order. And now I can assign this cost. So what I'm going to do now, direct material going to be directly traced to the product. Direct labor directly traced to the product. Shipping cost also directly traced to the product. Now we're talking about the manufacturing, non-manufacturing cost. So we're going to have for the customer orders that much, or traced to the product design that much, order size that much, customer relationship that much, other, they just company expenses. We're not going to deal with those. Next thing, in the company, we have two divisions. One producing standard sanction, the other one producing custom compass housing. For the standard sanction, we have these activities inside. Requires no new design. So no new design will cost for the new design is not going to be applied here. We're going to have 30,000 units ordered with 600 separate orders. Each sanction requires 35 minutes of the machine time, total of 17,500 machine hours. Compass require one new design, 400 separate orders, 400 custom design prepared, and 1,250 housing produced, require 2 machine hours each on the total of 2,500 machine hours. Since we have this, can we assign the cost? Well, obviously we can, right? So we're going to have for the customer order 600 times 320. Yeah. Product design, no product design, so that will be no cost. Order size 7,500 for 19, that much. Same thing we're applying for the custom housing. And now, if you want to go even deeper to chase the customer, we can even go and chase the customer. So for this customer, he ordered 2 orders for 150 standard sanction per order, 1 order for the custom compass housing. Machine hours, 300 standard sanction require 175 machine hours. The custom compass housing require 2 machine hours. Based on that, we can come up with the cost for that, for the allocation of activity, because based on the activity for that particular customer. So let's prepare the management report. First, go with the direct cost. Again, direct material, direct labor is shipping. Those will be directly, since those are direct costs, they will be directly allocated. The interesting part comes with the manufacturing, non-manufacturing overhead cost based on the activity. So here, activity cost assignment, we're using this assignment, not this one, where was that? We're using this assignment to apply it in this chart right here. Not this one, this one. Oh yeah, this one. So here, as you can see, 192,332, that's the same 192,332. We are assigning this overhead, which we come up with this one before. Same thing here, we are assigning that cost as well, 128,252.47. What was it here? 128,252.47,500, and we are assigning that here. Once we assign those costs, we can come up with the product margin calculations for those 2 products. And if we continue one step further, once we have the product margins, right, here we can get the sales, total cost, product margin. Sales, product cost, total margin. Customer relationship, other cost, because we're not allocating here anyway the customer relationship. Other cost, and we come up with a net operating income. So if you remember, in the very beginning, here, that's what our operating, we have the operating loss 1,250. Here, we're not changing it. but now we have a different allocation. Now we split the cost by the two divisions. And now we have the product margin for the standard sanction, and we have the product margin for the custom compass housing. And in this case, as you can see, the custom housing losing money. Let's continue further. Let's go on the customer profitability. If you remember, we prepared this for the customer. What was that? This is the calculation for this customer. So let's continue. We're going to add the direct material, direct labor, and shipping. We're going to add then the activity pool that we already created from here. We're going to add it here. And we're going to come up with the calculation for this customer. And we're going to see on this customer, we actually making $6.99. So what's happened so far? On the activity-based costing, we come up with the activities. We created the cost pools with the total cost under each cost pool. Then we come up with the cost for that, for the single activity. And then based on the usage of that activity, we're assigning the costs. Now let's see the traditional. Traditional, the direct material, direct labor will be the same. Shipping, we're not allocating the shipping on the traditional. The shipping is directly expense. Now, the second part is we have to come up with the manufacturing overhead. But for the manufacturing overhead, we're going to use the total cost, which was the 1,000. And we're going to see the total usage of the machine hours, which was for the standard sanction, we're using 7,500. And for the custom and compass housing, 2,500, that's 20,000. Based on that, we're going to come up with the predetermined manufacturing overhead, which will be $50 per machine hours. And now we're going to assign the cost to those two products based on the machine hours. Once we do that, we can run the report. And if we run the report, again, we're not going to change. So listen, watch this. We're not changing the bottom line. We still have a net operating loss. However, the product margin has changed. And we're not allocating the marketing expenses, and we're not allocating any general administrative expenses. Those are directly selling administrative expenses. Compared to the previous one, as you can see, on the previous one, here we have $900,000, over $900,000 for the one product. On the traditional, that product margin dropped with $300,000 almost. On the other product, we're losing money, 49. Here, that product is profitable. Again, we're not changing the bottom line. The bottom line is we're still losing $1,250. But allocation of the cost is different, which change our perspective of on which product we're making money, on which product we're losing money. So if we have to make the comparison, what's happened here? The traditional system overcost the standard sanction. So put more cost on the standard sanction, make it more expensive, on the other words. And that shows the lower product margin. Where on the other one, on the custom compass, undercosted, assign less cost, which make it profitable, which in fact is not. At this point, there are three reasons why the reported product margin for the two costing system different from one to another. First one is that traditional costing allocation allocates the owner manufacturing overhead to the product, where in activity base allocates only the manufacturing cost, which are actually used by the product. Whatever is not used is not allocated. Traditional costing allocates all the manufacturing overhead using the volume-related allocation based, where in the activity-based cost you have transaction allocation based, or you can have duration allocation based, not always volume-related allocation based. Next one, traditional costing disregard the selling and administrative expenses and treat it directly as a period cost or directly expense, where activity-based costing, including tracing the first, directly trace the shipping cost directly to the product. Second, includes the non-manufacturing overhead cost, which are caused by the product, into the cost pool, which are assigned to the product. What's happened with the targeting the process improvement? Activity-based management is used to, in conjunction with activity-based costing, to identify areas in which the benefit from the process improvement. We're going to continue chapter 12, and we're going to talk about more about the decision making when you come to the cost and calculation of the contribution margin per product and how we can use that one for decision making. The benchmarking usually is identifying which are the leaders on the industry or on the market, and try to be one of those and compare yourself to one of those. So on the benchmarking can be used to compare the activity cost information with the world-class standards of the performance achieved by another organization. In other terms, you can compare yourself with the leaders on the market and try to reach their standards. For the external reporting, most companies don't use, technically don't ever use the activity-based costing for the external reporting. Why? The external reporting are less detailed. First, you're never going to release all the information, the relevant information with the profitability for the product and contribution margin for the product to your competitors or for the outsiders of the company. Those are management reports. Those are technically confidential reports. It also may be difficult to make the changes to the company accounting system. So since this is a supplementary system to the traditional system, you have to make the changes to the existing accounting system, which might be difficult. The next thing is activity-based costing, as we said in the beginning, it's not acceptable by the general accepting accounting principles. So if you use it, you still have to prepare the financial statements under the traditional system. An auditor they can always question the subjectivity of the allocation process. You see, you're working with the percentages, and auditors don't like the percentage. They can easily come up and start questioning all the allocation basis on the cost pools. So that creates the problem. So for that reason, activity-based costing is only for the internal purposes, not for the external reporting. Now, limitations. What are the limitations? First, very expensive. The system itself is very expensive. How much very expensive? I would say super expensive. So only the companies which can actually see the benefits, they're the one who's going to use this system. Because again, for everything in life, you have to understand, you have the costs and you have the benefits. As long as the benefits are more than the cost, go for it. That's why you're buying everyday coffee, for example, for those of you who buy coffee. Why? Because the benefits of having coffee are more than the cost. For the girls, that's why you're going to shopping. Because the benefits of wearing something new and nice are more than the cost. That's why sometimes you're looking at something and you're thinking, should I buy it, should I not? So basically what you're doing, cost-benefit analysis in your head, right there. And if you end up not buying it, the only reason for that is that probably the benefits are not enough to cover the cost. That's why you decide not to buy it. Am I correct or incorrect?
Correct.
Correct. You're doing the cost-benefit analysis every single day, at least 100 times per day. Every time when you have to make a decision to buy something, to purchase something, to compare this, compare that, you're making decisions. Based on what? You never ask yourself, why I'm choosing this and not doing that? Why I'm sitting in this classroom right now instead of being outside and enjoying the sun or going on the ocean, swimming in the ocean? So again, the substantial resources are very high, but only matters when the benefits are higher than the cost. Next thing, it desires a full allocation of the cost to all cost to the product. Because if you don't allocate all the costs to the product, then you're not doing anything. So if you don't have the desire to use it to the extent of the capacity of the system, don't even bother starting it, right? That's another thing that you should understand. Sometimes, actually most of the time, you're driven, your decisions are driven, but then from something else, rather than do you really want something? Sometimes you don't want it, but because you want to show the other people that you have it, you're getting it. And after that, you don't even use it. Well, why do you need it? Here, you're not going to buy it if you don't use the full capacity of the system. It doesn't make sense. Because if you don't using the all allocation cost to the product, then you're creating a wrong reports. So basically, you're killing the purpose of activity-based costing. Instead of creating the correct reports, you're going to go with the incorrect reports. Well, if you want incorrect reports, you already have it to the traditional system. Why bother getting the activity-based costing? That's why sometimes you have to ask yourself, when you have an iPhone 7, or I don't know what's the number now, and now iPhone, I don't know what kind of number, 1521 or whatever numbers comes, and you say, I want it. Well, see what you have, compare what the other have, and if the other have benefits, but you're not planning to use those benefits, what's the value to have that one? Trust me, nobody's noticed what kind of a model of iPhone you're going to have. The other thing is resistance of the unfamiliar numbers and reports. You have to understand, the people are scared. You are scared. You are scared every time when you come to the classroom. You are scared of what? Of the new things that's coming, because you're not familiar with them, and that's a normal thing to do. Everybody's scared, but being scared limits your ability to learn something new. I'm also scared. I'm always scared of the new things. Very few times I'm just going open-minded to the new things. I'm usually skeptical. I'm usually scared. Because I'm scared, that's why I'm skeptical. But I'm never going to tell the people that I'm scared. Because again, here goes to the ego, right? And you have to understand that two drivers in our life that prevent us to be better human beings. One is the ego, the other one is the greed. And there's the other. If you can overcome those, we'll be a great individuals. Again, it's hard. And most of the time, you prefer not to admit it, even though you know that it's there. It's a sad story, actually. You know, when you fail, failing and winning, that's a very relative term, because in reality, there's no winning, there's no losing, there's no failing, there's no climbing, there's nothing like that. It's just a matter of perspective. But when you feel that you failed something, and you perfectly know what the reason for that is, and you perfectly know what your mistakes are. The only problem is you never admitting those ones. You always try to blame the other people. Why? Because you're scared. Because you're scared to admit, to tell yourself that, hey, actually it's my fault. What surprised me, what I always have in my mind is this: when I was I? Can't remember now. Maybe in the high school. Was in the high school, or the first year of the university, something like that. Anyway, I was like 18 years old. Yeah, that age, 17, 18. So that before military. So anyhow, on that time, I was very involved in the World Rally Championship stuff. I don't know, for those of you who following that type of sports, they probably know what I'm talking about. Anyhow, so there was this rally driver. He didn't have the much money. See, he always getting the how can I say, the less competitive car than the other people. But he always beating them because he was better driver than them. The other people were thinking that when they have a more powerful car, they can get a win. But then you're coming to the point that you have something, but you cannot use the capacity of that things because you have a limitation, because you're not a good driver. On the other hand, the other guy, he was with the lower capacity car, but his driving skills are way higher than everybody else. So he was able to fully utilize the capacity of the car, and he was beating them. And when the other people, when the journalist goes to those guys with the higher cars and ask them, hey, how come you have such a powerful car, but the other guys beat you? And they say, well, there was a problem with the transmission, there was a problem with this, there was a problem with that, there was a problem with this. They always try to find excuses with anything else, but and they clearly know that they're not good drivers, but they're never going to admit that, right? So this guy, they always ask this guy, and he said, well, how you doing? And he said, well, everything's fine, the car works perfect, we're doing great. And they ask him, well, how come the car works perfect? We heard on this stage you have this problem, on that stage we have that problem with transmission, on that stage you have this problem, you have to change those things. And he said, listen to this. I never gonna hide behind my problems. Problems are to be solved. The problems, they don't matter. There are two types of people. The one who want to do something, and the other that don't want to do something. If you want to do something, you're gonna find a way to do it. If you don't want to do it, you're going to find the excuses and the reasons not to do it. Right? So he said, I'm never going to complain with those things. I'm not a whiner. I'm the one who's get the things done. That's it. So that always reminds me this. Every time when I make a mistake or when I do something wrong, I always ask myself, or if something goes wrong, I always ask myself, what's my fault? I never blame the other people. I first blame myself. Because I personally know that if something goes wrong, I may have done it better. So resistance of the familiar numbers and reports that's what's causing that. Because people first, they're never going to admit that they don't understand something. If you throw to your manager or your boss a report, and he has no idea what he's talking about, what that report is talking about, he's going to say this report is wrong. He's never going to say, well, actually, I don't understand anything. Can you please explain to me? That's the resistance of familiar numbers. Potential of misinterpretation. Obviously, if you don't understand the numbers, if you don't understand the logic, if you don't understand how the numbers were developed or come up with the numbers, you can misinterpret the numbers. So misinterpretation of the numbers comes from the lack of solid foundation. Lack of solid foundation for the managers, coming from inability or resistance to learn new things when they were in school. Why? Because when they were students, they were thinking something else is more important. Sadly, when they leave the school and go to work and find out that these things can be learned at school, then realizing and they're admitting the mistake that they made before, and then now they understand and they say, maybe the school is actually very important, but you're not in the school anymore. So not learning now is going to have effect in your future. You have to understand this. And learning now, again, is going to have effect on your future. Either way, you're going to affect your future. Because the future doesn't start tomorrow, it doesn't start in 10 years, it doesn't start in 20 years. That's not the future. The future is today. What will be your future tomorrow depends on what you're doing today. If you decide not to do anything today, I can easily tell you what will be your future tomorrow. If you decide to do something today for yourself, then you already start determining your future. So every time when you tell me, well, something's going to happen one day, nothing's going to happen one day if you don't do anything today. Because tomorrow will be the same distance like before. People saying that, well, I don't want to go to school. Why? Because it's going to take me 5 years. Okay, fine. Next year, they're saying the same. I don't want to go to school. Why? Because it's going to take me 5 years. Well, if you have started last year, by this time, you're going to have only 4 years left. Yeah, true. Maybe I'll think next year. So next year, they're saying, well, I'm not going to go to school. Why? Because it's going to take me 5 years. Well, by this time, you're going to complete the second year. So 5 years later, the person can graduate and the other person can be at the same position that he was 5 years ago. So how far away he moved in his future? He didn't go anywhere. The other person graduated and now he has better options. and he has a better life. And the other people say, well, if 5 years ago I went to the university, now I should have been this and this. Too late, my friend. The time doesn't fly back. You already made your choice. Now live with the consequences. Now you can just watch the other person next to you who enjoying the graduation 5 years later, getting the results, and enjoying better life than you. You can just watch him. Now you have example what would have happened to you if you have done something that you haven't done. So please be smart with your future, because if now you don't get a good foundation, there will be nothing to build on. The other day, one student asked me, well, maybe we don't need that foundation. Yes, but you don't know what you're going to build on. What do you mean? I said, imagine this. You just built some, you decide, okay, I need a 1-bedroom house. You're building a house. You need one-story house. Okay, 1-story house. Boom, done. 5 years later, you have 2 kids, and you say, oh, maybe I should think for the second level. Let's build a second level. And then the engineer comes and say, sorry, too bad. Why? Well, you have to destroy everything and make a new foundations which can hold the first level and the second level. But if you want to go one day from now, if you decide to go on the 3rd level, then you have to do even better foundations. So instead of be that person, before you building 1-story building, make a good foundation for 6-story building. Build one story and then build a second. But you don't have to worry about the foundation because the foundation is already there. That's how your knowledge should be. Your knowledge should be strong enough not to make you a good employee, to make you a good owner of the company. So one day you can become the owner of the company. Not today you finish something, go to work, and then you realize, well, I cannot be manager. Why? Because I didn't pass this and this and this, or I forgot to, I don't know what is this, what is that. So then you're going back to school to become a manager. But one day you want to run your own company, but you feel that, well, I have a gap in my knowledge. Why? Because I didn't pay attention in this and this and this class. I should have paid attention, I should have learned. So now I have to go back to school and then to become the owner. Why do you have to do this back and forth, back and forth? When now is the time that you have to study and you have to learn everything. The next thing is, so that's the misinterpretation. The last thing is activity-based costing doesn't conform with the general accepted accounting principles. That's why you have to run 2 systems. Perfect example for activity-based costing. Do you want me to give you another application of activity-based costing?
Yes, Professor.
Activity-based system is used everywhere in your life.
Excuse me.
Yes.
I'm also sorry to disturb you, but I have a question related to that. Like nowadays, there are many companies, so they used to prefer the ABC or traditional method of cost.
Depends on the company. So obviously, if it's a small company, they're going to go to traditional costing. If it's a big company, if they see benefits, if the benefits of using activity-based costing is more than the cost, they're going to go with activity-based costing. That's why you have to be smart manager. You have to assess the company size and the benefits of this. Make sense? So the small companies, what's the value for them? What's the value for the small company to spend $80,000 to $100,000 on the software when the entire sales are $100,000 for the year? Does it make sense? They can achieve the same result by running Excel spreadsheet. But our activity-based system is used against you every single day. You are actually part of the activity-based system. Each of us is part. How? Every time when you go on the internet, somebody's watching you and make a records. What kind of activity you doing? How many seconds you're spending on this? What's your searches that you're doing? What kind of words you're searching for? When you're searching that word, when the results come up, which results you're clicking on, the first, on the second, or the third, or fifth? When you click on that one, what you're looking at? When you go to your favorite shopping, online shopping, which items you're looking at? How many times you're spending on those items? What's the milliseconds that flipping from one item to another item? What's the colors that you're looking for? What's the size? What's the model? What's this? What's that? Everything. Everything is activity-based information, which is stored for you. They already have the picture of you. They have a picture of your relatives. They have picture of your relatives' relatives. They have picture of your friends. Every time when you post picture on Instagram, on Facebook, or on anything on social medias, those pictures are recorded. Your face is scanned. So this is the person, which are the next people next to him. They getting the information about those people. They matching their avatar with your avatar, their interests, their everything. They have a psychological profile for each single person on planet Earth, and that is stored at least on the 3 or 4 different locations, because Google has a secure location for all the information they're having on at least on 3 places on the Earth. So that's your activity-based costing, people. Activity-based system to collect information. Artificial intelligence collect that information, analyzing the information, making the avatar for you, which avatar exists somewhere in the online environment. Your cell phone, every time when you turn on your cell phone, it's already recorded where you are. If you're using the GPS navigation system, exactly tracking your position by the cell phone number, because the cell phone number is in the system. Where you're going, how long it takes you, what's your pattern during the day, during the night, where you, which location. How do you think people know where you are? How do you think sometimes they call you when you're on vacation, call you this and that? How do you think these things happen? Just randomly? There's nothing random. It's all information collected. Every time when you're using your credit card, the information goes there. Every time when you're using your card for the shopping cart, for the PC points, or for the Safe on Foods points, or the Costco card, whatever card you have, it's all related to the same profile that you already exist. It's all information. Activity-based is all information. And now, once I have information, I can create the different reports. They can even recreate a conversation that you probably gonna have with your friend. That's why Google, they don't record the phone calls anymore. They used to recording the phone calls, but now they don't. Why? Because they have enough information. Even they say, we have enough information for every single person on planet Earth. So every time when you call your friend, we can recreate that conversation up to 98% accuracy. We already know what you're going to talk about before you even think to talk about that. That's why when you go to the restaurant, when you open the whatever searching engine, it's coming the options that are related to your taste, to your culture, to your background, to your age, to your gender. All activity based on the activities, every single activity, everything that you're doing during the day, it's recorded, is monitored, analyzed, and used. That's why when you open your email, on the left side, on the right side, where the commercials are or ads are, you're seeing the picture of the items that you're searching 2 days ago. And they're there. When you received on the mail, on email with the flyers from this and this or points, usually the items that you already purchased. How do they know that? That's your activity-based costing. So you can see how powerful it is. Obviously, for the single company, that's impossible. For the multinational companies like a Facebook, like a social medias, that's enormous flow of information. And that's why when you come up with some idea which is profitable, suddenly somebody else did it for you. Why? Because they already get the idea. Welcome to the new age. And you think you're free. Think again. That's for today, for the chapter. End of the activity-based costing. Again, super powerful tool if you can use the capacity and if you have the desire to utilize it to 100%. And if you have the knowledge and if you have understanding. If you can use it, you can get great benefits. So now, let's go to midterm. Let's talk about the midterm. Midterm. Your midterm is going to be next Wednesday. You already know that, right?
Yes.
Okay.
Yes,
good.
Professor.
So midterm is next Wednesday, and that will be August 11th. Midterm will be available for you for the whole day, for the entire day. Okay? You're going to have 28 questions on the midterm. 28 questions. There will be multiple choice questions and there will be short questions. Nothing scary, nothing that you haven't seen yet. There will be questions that you have to prepare schedule for cost of goods manufactured. There's a question on the activity-based costing. There's a question on the cost volume profit analysis. And there's a question on the job costing. There's one question on the calculation of predetermined manufacturing overhead. And the rest is multiple choice questions. You're going to have 3.5 hours. So the exam will be available on August 11 from 1 o'clock a.m. until 11:59 p.m. It's for 3 hours. So once you start it, you have to finish it. It's in Connect, not in the Moodle. There will be no paper sent to you. You have to go to Connect, where you're doing your assignments. The exam is going to pop up there. It will be available for you on the August 11, which is next Wednesday. You don't have to come to the Zoom meeting here. You don't have to come to the Zoom meeting. There will be no Zoom meeting, nothing like that. Make sense?
Yes, Professor.
Yes, Professor.